Royalty is the amount paid to the owner of a monopoly or privilege for the right to use it. Example: patent right, copyright, mineral right, mineral right, etc. Now let me explain this before we proceed. Please, I'll not repeat it, but I don't have time. Now, when you hear the word royalty, it also still means rent. Okay? Now, royalty has to do with the amount you pay the owner for of a particular right, for the privilege he or she will have to give to you to use that right. For instance, you are staying in somebody's house or hostel that is not your own. What are you paying? So the person is giving you the privilege or the access to use that building for a certain period of time in exchange for a value which we call rent or royalty. So what it means is that we can have an owner and we can have a user. Please follow me. Now the owner gives this person his right. That is why we have different oil companies in Nigeria. Most of them are not owned by Nigerians. Oando, Ajib. What those people are doing is that they are paying royalty because Nigeria gave them the right to mine. That's what we call mineral right. The same way, if you have any book with you, if you check at the back, you'll see copyright. It means that we are giving the owner or the author the right of every content inside the book. So if you want to make use or access of using a content there, you have to write to the owner of that book to give you what a privilege. The same thing happens in music. A lot of us in music also. Whereby you hear somebody say, you steal my music and all that. You can be sued for that and you will pay heavily. So when it comes to royalty, except you pay the person that has that, the person gives you access. Now, the essence of this is so that anybody that is making an invention can enjoy his benefit of that invention. For instance, if somebody comes out today and said he has gotten the cure for HIV and AIDS, now what they will do is that that person will have, before every other doctor will come to learn and start probably producing the drugs, they will give that person a privilege to enjoy his invention for a certain period of time, such that he's the only person. Because if they don't do it like that, people will not have the zeal to invent some item. Okay? So the owner gives the user the right, while the user in turn pays what we call what? Royalty. Okay? Now the owner can be called the landlord. Which landlord? And the lessor or the grantor. These are several names they can use. While the user of this right can be the lessee, the tenant, and the grantee. The owner giving the right to be used, while also we have the user paying royalty to get it. Now, at a certain time, please follow this illustration before I give you a copy. At a certain time, the owner can say, okay, be paying me a certain amount of money based on your actual production. Now, if the user, let's say, is using a particular piece of land to farm or to produce an item, now the owner can say, okay, pay me, let's say, 5 naira per your production. This 5 naira that the person will pay is what we call royalty payable. It means you are going to pay 5 naira per whatever you are producing. Now, there's what we call minimum rent. I'm going to give you a note on it. I just want to explain. Minimum rent. Now, minimum rent entails that it is the minimum amount that the user is going to pay the owner. For instance, look up. If the owner says, please, what I'm putting is 5 naira per whatever you are producing, but the minimum amount I will accept is 20,000 for a particular year. The minimum amount. You might accept above, but he might not accept below this amount. And what it means is that if this person is producing an item, and let's say in the first year he makes 100,000, second year there's no money, he now make 10,000. What it means is that what the user make is not up to what he's supposed to pay. He will go and find money and add it and pay this minimum amount. So the minimum rent is the minimum amount the user is supposed to pay to the owner. So if he makes 10,000 and he's supposed to pay 10,000, so it means he is going to find 10,000 anywhere and add it and what? And pay. That's what the minimum rent. Now that 10,000 he's going to add up to pay. We call it short working. We call it short working. Short working is the difference between what you are supposed to pay and the minimum rent. The short working. Because what you got from your production is lesser than the minimum rent. So you source for fund in order to what? To pay that money. So we call it short working. Now, also, the owner recognizing that the user is also human, he might also give in a contract that, okay, because I recognize that you can generate money from different places to pay me, so I'm going to give you access to recover your short working for a certain number of years. What it means is that any year the user make more money, he will only pay the minimum rent and he will now recover those money, those short workings he have been paying. For instance, after the second year, if the owner said, okay, after the short working, you can recover your money in 2 years after any time you make short working. So after the second year, probably the third year, the person now made money of, let's say, 50,000. So what it means is that if he pays 20,000, which is the minimum rent, the 10,000 he collected before, he is going to take it for himself. That is what we call short workings recover. Short workings recover or recoup, meaning you are getting the funds back. Also, there's what we call short workings elapse. Remember, I said the owner gave him 2 years. So if after these 2 years, probably in the third year, the person has not recovered that money, that full amount of money he has spent, the short working has elapsed. It means even if he makes more money after that 2 years, he will not recover it again because they gave him a specified period of time. So it means the other money that is remaining is elapsed. So we call that short workings elapsed. Okay. So these are the item that concerns the royalty account. There are other terms also, but I'm going to give a note on that. Now let's continue. Let's write. The following terms are needed. Number one, landlord slash lessor. This is the owner of the right. He's the owner of the right that gives access to another. He's the owner of the right that gives access to another. Number two, are you there? Number two, lessee slash tenant. This is the user of the right of a lessor. This is the user of the rights of a lessor. Number three, actual royalty. Actual royalty. Actual royalty is gotten from the utilization of the right. Number four, minimum rent or slash dead rent. It means the same thing. Should in case the question minimum slash dead rent. Are you there? This is the minimum amount payable to the landlord. This is the minimum amount payable to the landlord. Oh, number five, sorry. Short workings. Short workings. This is the excess of the minimum rent over the actual royalty. The excess of the minimum rent over the actual royalty. Number surplus. Surplus. Are you there? This is the excess of actual royalty over minimum rent. That's the other way around. This is the excess of actual royalty over the minimum rent. Are you there? Number seven. Short workings recouped slash recover. Are you there? Short workings recouped slash recover. This is the number of years given for the user to recover his short workings. User to recover his what? Short workings. Number short workings elapsed. Short workings elapsed. Are you there? This arises when you have exceeded the number of years. This arises when you have exceeded the number of years without recovering the money or short workings. Where you have exceeded the number of years without recovering the money or what? Short workings. Number 9. Payments to landlord. Payment to landlord. This is the actual amount paid to the landlord. This is the actual what? paid to the landlord, full stop. It should not be below the minimum rent, but can be above. Should not be below the what? But can be above. Did you get that? This is the actual amount paid to the landlord. I said it should not be below the what? Minimum rent, but can be above. The next one is what? Number 10. Royalty schedule. Royalty schedule / chart. Royalty schedule / chart. Are you there? This is a table that shows the calculation involved in royalty. It's a table that shows the calculation involved in royalty before it is posted to the ledger. This is a table that shows the calculation involved in royalty before it is posted to the what? To the ledger. Full stop. So those are the things we should know. And if you check it, they are self-explanatory. The one I didn't touch is what? I thought it is payment to the landlord. Payment to the landlord. Now, at the end of the contract, let's say it is 5 years. At the 5th year or the last year, if they made 50,000, and we know that the minimum rent is how much? 20,000. Probably this is the end of the year. You can pay above. Probably if he has recouped if they gave him privilege to recover his short workings, the remaining amount, if let's say it is now 40,000, he can pay all the money to the landlord. So the money is exceeding the minimum rent. So we call that payment to the landlord, the actual amount to pay. Then royalty schedule. Royalty schedule is a table where you show all these things before you post to the ledger. Now, I want to see the bookkeeping entry. Now, how do we record this? The bookkeeping entry. Now, the bookkeeping can be in the lessor or the lessee. Now, we have seen the lessor as the landlord, while the lessee is what? The tenant. So, in this, we are going to see for the lessee in the book of the lessee. Now, in the book of the lessee, there are practically 3 accounts that is needed. That is what this work is focused on. 3 accounts that is needed to be posted. Now, the first one is the royalty payable account. The second one is the lessor account, while the third one is short working recoverable account. Now, these are the 3 accounts that the lessee. Now, who is the lessee? The user or the tenant. These are the 3 accounts that is expected to prepare. Other accounts can come, cash and all that, but this is the 3 major. Also in the exam, this might be the 3 that you may be required. Now, the royalty payable account. Now, this is where you record the royalty that is paying. And to the lessee, he is seeing this as an expenses. He's seeing this as an expenses. Why the lessor? Remember, this is the lessee, like we have seen in the bill of exchange. Since the lessee, that's the user, is preparing this, he's going to prepare on behalf of the landlord, who is the lessor. So he's seeing this as a liability to him. Why the short workings recoverable, he's seeing it as an asset. Okay. So these are the three books. Now, how do they record this? The first one, when there's actual royalty. When there's actual royalty, now we debit the royalty payable account and you credit the lessor account with the amount of royalty. With the amount of royalty. That's the first one. That is when there's actual royalty. Now, the second one is when there is short workings. Now, of course, we have seen what we mean by short workings. Now, say short workings is when the what? The minimum rent is more than the what? Actual royalty amount. So what do we do? The debit side, you debit short workings account and you credit the lessor account with the amount of short workings. While the third one is if there is short workings recoup. Short workings recouped also means recover. If they are recovering their short working, it is the opposite of this. So what do? You debit the lessor account and you credit the short workings account with the amount of short workings recover. Why the fourth one is when short workings elapse. Now, we know what elapse means. It means that if it has exceeded the required number of years, it is no longer required to recover the short working. So say short workings elapse. Now, we debit the profit or loss and we credit the short workings recoverable accounts with the amount elapsed. With the amount elapsed. Right, the last one is when royalties paid to the lessor you debit the lessor account and you credit the cash or bank account with the amount paid with the amount paid. Now, this is the bookkeeping entries in the book of the lessee. Now remember, we said three accounts is the main account for the lessee. Others can follow, but these three accounts must be shown. Royalty payable is he sees it as an expense. Lessor account he sees it as a liability, and short workings recovery. So actual royalty, that is the production, short workings recoup, short workings elapse, and royalties paid to the lessor. Now we'll see one question and we call it a day. Okay, now let's see this question. Okay, if we check the question in a patentee authorized Samco Limited to use his patent to produce and market a particular product. The royalty was 1 naira for every item produced. Full stop. In the first 6 years, the quantities produced were as follows. Now we have the first one, a 1,000 quantity, 6,000, a 3, 7,000, 4,000, 5, 7,000, and 6 is what? 8,000. Now they said the minimum payment was 5,000 per annum. So it means that's the minimum rent. So irrespective of if the man make money or if he doesn't make, he will have to pay the minimum of that amount. So say full stop. If in any year the royalties calculated based on output amounted to something less than 5,000, Samco Limited may set off the deficiency against royalties payable in excess of that sum in the next 2 years. So what they're trying to say is recover. Short workings can be recover 2 years if there's any short workings any year. You are required to show the ledger account recording the above transaction in respect of royalties in the book of Samco Company Limited, which were closed annually on what? December 31st. Now, the first thing we are going to do, I said there is what we call royalty schedule. That is what we are going to use. It's not in the text, but it's important. It will help you understand. Because if I need marker, understand and assimilate it very well. Now, we are going to prepare the royalty schedule first. Okay, now this table will help us. Once we do it, it will help us post well. Now this is the royalty schedule. Now this is the year, the output, royalties work, the minimum rent that is required, short workings, if there is surplus. I didn't talk about the surplus. It's the opposite of Short workings. That is when the actual royalty is more than minimum rent. Short workings recoup. Short workings elapse and payments to landlord. So the first one is, how many years is there? Huh? 6 years, right? From the question that we have, 6 years. Now, what are the outputs? For year one is how many? 1,000, right? Year two is what? 6,000. Year three is what?
7,000.
Year four is what?
4,000.
Year five is what?
7,000.
Year six is what?
8,000.
8,000. Now, royalties worked. Now, they said they are going to pay. How much is the amount? They said the royalty was 1 naira for every item produced, right? 1 naira for every item produced. So the royalty work would be that amount times the production. So it will now be 1,000 times 1 naira. So 1,000 times 1 naira still gives us 1,000. Now the next one will be 6,000 times 1 naira, which is still give us 6,000. The next one is what? 7,000 times 1 naira, which is what?
7,000.
The next one is what?
4,000.
4,000 times,
1 naira.
which is still what?
4,000.
The next one is what?
7,000.
Times 1 naira, which is still what?
7,000.
Why the next one is what?
8,000.
Which is still what?
8,000.
8,000. Now please follow me. Now what did they say is the minimum rent?
Payment.
5,000, right? So they say minimum rent is 5,000 for each year. 5,000 for each year. 5,000. Now look up short workings. Now where is short workings? When the minimum rent is more than what they have gotten. Remember, now this is the output, what he has gotten for each year. And this is the amount that he got, 1,000. But he's supposed to pay 5,000. So what he got is less than what he's supposed to pay. So it means he must pay this money because this is the minimum amount. So it means he has to get more extra fund to pay, and which gives the short working, which is now how much? 4,000 is short working. So we have this, and payment to the landlord is 5,000. Now, if you remember in the question, they say short workings. Anytime we have short workings, they are giving how many years? 2 years to recover it. So we have short working here. If in this situation there is surplus, they can recover it in 2 years. So the next one, they made 6,000 and they have to pay minimum rent of how much?
5,000.
Is there short working? No. But there is what?
Surplus.
Of how much?
1,000.
So they can recover part of this money. So have 1,000, right? The how much was paid to the landlord?
5,000.
5,000. The next one, 7,000 was made. Is there any short workings?
No.
Is there surplus?
Yes.
How much? 2,000. Now they gave us 2 years and we have recovered 1,000 first. Remaining how much? 3,000, abi? So we recovered this again, 2,000, right? Then how much was paid to the landlord?
5,000.
5,000. Now the 2 years they've given us have elapsed, but our money is still remaining how much? 1,000. We cannot recover it again. It will definitely elapse. So this one, the same thing. 4,000. 1,000 is short working, right? Surplus? No. Remember, we are elapsing this 1,000. For this one now, we have recovered 3,000, but our short working is 4,000. So short workings elapse here. Okay, it is supposed to come here. Sorry, 2,000 is supposed to come here as elapse 1,000. So here we have 5,000. So here, the first year after short working, second year, we are able to recover 3,000 and we elapse 1,000. Then this one, No. Surplus is how much?
1,000.
2,000. Short workings recover is how much?
2,000.
2,000. No, we cannot recover 2,000 now. We have short workings here of how much? 1,000. So we have just short working recovering of 1,000. So 5,000. So the next one we have here is there short workings? Surplus 3,000. Nothing to recoup. We've already recovered and elapsed. Now the amount we are going to pay here is 8,000. Remember, I told you at the end, the excess of what you got, we are going to pay the total amount to the landlord. He made 8,000. He's supposed to pay 5,000 with the surplus, but there is no other contract, so he pays the totality of the amount. So we are going to record this now in these three accounts. The first one is a royalty, and that's the last transaction for call it a day. The royalty payable account. The liaison account. And now for year one, which is the first year, now we said if royalty is made, we are going to debit the what? The royalty payable account. Check in the bookkeeping entries. When actual royalty is made, what do we do?
You debit royalty payable account.
Debit royalty payable account, and you credit what? The lessor account. So that is what we are going to do here. The first one, which is December 31st, royalty payable. How much is it? Huh? It's 1,000. So it can be called lessor, or in the text they use patentee. Still the same thing. While year two, December 31st, is how much?
6,000.
6,000. Year three,
7,000.
7,000. Year four,
4,000.
how much? 4,000. Year five,
7,000.
7,000. And year 6,
8,000.
now we said the corresponding entry comes year one. We have the royalty. How much is it?
1,000.
1,000. Right?
Yes.
1,000. Now let's follow suit. Now look up. Year one is 1,000 for the royalty. Now, but what is the lessor supposed to receive for year one? What is the supposed amount? The minimum rent? 5,000, Abi. Now we said 5,000. So it means we debit the lessor account. What he is supposed to receive is 5,000, which is the actual royalty. So we debit it as a one. We have cash of 5,000. What is supposed to receive? 5,000. But the royalty, the corresponding entry, is 1,000. It means there is a what? Short working, right? Which is this what? 4,000. So to balance this off for year one, we have here short workings, which is how much? 4,000. So this gives us 5,000 here, and this is what? 5,000. That is year one. Now this short workings here, corresponding entry comes here. So we have year one, December 31st. We have here the lessor, because this is from the account. How much? 4,000. So for year one has concluded. So we just have a balance carried down, 4,000, and we'll bring it to year two. Balance brought down, 4,000. So we have brought down the balance for year two. Now the second year, lessor 6,000. The corresponding entry comes here. Year two, we have royalties. How much is it? 6,000. But what is the lessor supposed to receive? 5,000. So we have year two here, cash, 5,000. So here there is no what? Short workings. But they told us 2 years after they can recoup the what? Short workings, right? So the balancing figure will be here, will become short workings recovered. So we now have here, remember this is short workings, 4,000, but the balancing figure to make this equal becomes short workings recovered. So it becomes short workings recoup. How much is it? 1,000. To make this 6,000 and make this 6,000. Now short workings recoup is 1,000. So the corresponding entry comes here, which is for what? For year two. So we come here, write year two, the short workings recoup, which is from lessor, we have recoup. How much is it? How much is it?
1,000.
1,000. So to balance this up, we still have balance carried down of 3,000. This is 4,000. This is 4,000. So we have a 3 year balance brought down of 3,000. Now we move to year 3. Now year 3, the same thing. Lessor 7,000. I'll come here. Year 3, the royalty is what? 7,000. But how much was supposed to be recouped? Paid, sorry. 5,000. So it means we have 2,000 that can be recouped. So short workings recoup. How much? 2,000. So to make this 7,000. So we have this 7,000. So short workings recoup come here also. Now we have here year 3, lessor, which is recoup 2,000, right? So if it is 2,000, now remember this is the last year we can recoup since it is 2 years. So the balancing figure will no longer be balance carried down, but it will be posted to the profit or loss. Remember, if you check in the bookkeeping entry, we said when it is elapsed, go and check it.
Yes. Yes.
So we said profit or what?
Loss.
Profit or loss. How much? 1,000. So that this will be 3,000 and this is 3,000. And we have closed that for year 3. So move to the next one, year 4. Year 4 is resolve 4,000. So I have year 4 royalty. How much? 4,000. But what was he supposed to receive? 5,000. So it means there's a what? Short workings. So we have here short workings 1,000, which will make this what? And this will also be what? 5,000. So have here from here, bring it here, year 4, balance brought down. Sorry, it should be lesser. Lesser, how much is it? 1,000. And we have also a 4 balance carried down 1,000. So come, this is year 5, it becomes balance brought down 1,000. So we are done with year 4. Then we'll go to year what?
5.
Year 5. So what will be year 5? 7,000. So come here, year 5, royalties. How much is it?
7,000.
7,000.
Yes.
How much was it supposed to receive?
5,000.
5,000. So now we have short workings here. So we are recouping how much?
1,000.
Which is this year 5.
You want year 4.
Okay. Year 5. Now we are recouping how much? Short workings recoup is 1,000. Now it means they are supposed to give him 6,000. What did we put here? 5,000 surplus is 2,000. They recover 1,000. So this is supposed to be 6,000. So if this is 6,000, so this is 6,000. So this is 6,000. So this makes 7,000, and this is 7,000. So we have short workings recoup here. So come here, year 5, which becomes the lessor as per recoup. How much is it? 1,000. So it balanced itself. Now the last part, which is year 6, 8,000. How do I do this now? Now year 6, look up. Oh. This part is short. So it's short working. So have year 6, right? Is how much?
8,000.
8,000. And I told you that since it's the final year also, they pay everything
8,000.
8,000. So here there is no, this is short working. Okay? So this is the lesson account, each of that, and this is royalty, and this is the short workings have been brought to book 8,000. Now this account we also have to close it. Now we close this account to production account or manufacturing. So what do you do? Just year one, write production or manufacturing 1,000 because they say they produce. Year two,
6,000.
production 6,000. Year three,
7,000.
production how much?
7,000.
7,000. Year four, production how much?
4,000.
4,000. Year five,
5,000.
production
7,000.
how much?
7,000.
And year six,
8,000.
production 8,000. So with that, if you remember your manufacturing account, it will have production and manufacturing. It turns to the debit side. So with that, that is royalty simplified. So we have to go check. If you can assimilate this schedule, it will help you to post to the ledger. And I guess that is not in your test, so I have to do that so that while you're revising for exam, it becomes easier for you. You get it?
Yes, sir.
Okay, thank you.